675, 676 or so against the greenback. We're seeing a bit of weakness coming to the fore. It was quite interesting to note that the euro dollar, the euro is still pretty much holding on to its gains. But where to from here for the local currency? Can we say that we've reached resistance at around 670 or so?
Well, we're seeing quite interesting moves at the moment. The rand itself has actually remained relatively range-bound despite the huge moves that we saw in the euro yesterday. The euro is back up at that 145 level. Rand's remaining relatively range-bound below 680, but that being said, if we see 682 break through, potentially we could see slightly higher. We've seen a lot of exporters come into our market this afternoon around that 677, 680 level, looking to get rid of some dollars at those levels because of the rally that we've seen, quite opportune just in terms of making hay while the sun shines.
Well, in terms of the IMF rhetoric when it comes to South Africa, we know that they are expecting slightly softer growth. They also said that we shouldn't be in a rush to hike rates given that we are underperforming the rest of the region. Did that have any bearing in terms of sentiment towards the local currency?
I don't think so. I think that if you've looked at what's happened in our bond market, if you've looked at what's happened with regards to foreign investment flowing into South Africa, we have seen continued robust interest in both the bond market and within the currency. So I think, not necessarily so. I think if anything, we potentially are starting to see some of our local importers taking advantage of these levels in the rand, looking to, get involved in purchasing offshore currency, that's being the sterling rand, the euro rand, the yen rand, etc. And those are the kind of things that are keeping the rand relatively steady at these current levels. We've also seen some central bank mopping up of dollars, which has happened, and that happened overnight, that happened this morning. Just small, incremental little bits, just keeping the rand within that sort of 10-cent range on a day.
In terms of the biggest headwind for the local currency going forward, can we say that the biggest risk right now is the prospect of an end to quantitative easing, and then followed by an interest rate hike in the US and followed again by the ECB hiking rates, so to China?
Well, I think that and I've said this to you before, is that the main drivers in the markets, and specifically the currency markets right now, are the impetus or the sentiment around potential for interest rate hikes. And we've seen that within the Eurozone, despite the fact that there certainly is continued sovereign default issues, there are definite pressures, the austerity remains, the currency itself is very strong. And why is that? Because of the interest rate implications going forward. And there's a lot of speculation once you start seeing ECB members becoming very hawkish. Obviously, Trichet was quite adamant about the fact that this is the first that they're going to do, and then they will see what happens going forward. But I think that more and more the market's starting to price in potential for more interest rate hikes out of that region. You see it in South Africa as well. Once we start talking about any form of hawkish comment, you see that the rand rallies on the back of that.
Oh, it's fascinating, Brigid. We're looking at some central bankers out of Europe and the US with a very hawkish rhetoric. And many have basically alluded to the fact that they don't really have a lot of weighting to the overall decision. The point is that a lot of central bankers are starting to shift gears and starting to become far more hawkish. So a normalization of interest rates going forward, is that what we are pricing in at this point? So a shift from negative real interest rates to positive real interest rates.
We're definitely in an interest rate hiking environment. It doesn't matter whereabout you look. It's already started in the emerging markets. It started in South America. It started in Asia. We're seeing a spillover into the developed world, which really shows you that the tail end of that recessionary pressure, which came in at the beginning from the United States, is now starting to filter into an inflationary picture. We can call it exogenous factors. We can call it the global crisis. We can call it tsunamis, and we can call it oil crisis in the north of Africa. The fact of the matter is that we definitely are in an inflationary environment. The unfortunate thing is that we don't have follow through from the consumer. We don't have that growth momentum that we've seen in previous rounds of similar kinds of nature, and that's been because of this financial crisis that has resulted in this enormous amount of debt that's in the system. And that's something that's going to have to unwind itself, and is definitely going to present a very interesting scenario as we go into this potential for, if we're going to see QE3 coming out of the United States, and what that austerity and obviously the sovereign pressures that are arising out of Europe.
Brigid, looking at the euro dollar, we're sitting at around 145. You've got March's CPI set to be released in the US on Friday. They're expecting an annual rate of 2.6%. It's quite interesting because if we used a different benchmark, perhaps going back to a different methodology, one used by Volcker, then we're looking at inflation rates in the US of closer to 10. If we do see inflation creeping through significantly in the US, will we see a massive movement in the euro-dollar cross?
Well, yeah, I think at the moment the market's kind of discounting the fact that the US is likely to remain behind the curve for an extended period, so it certainly is unlikely to start hiking before the beginning of next year. But then keeping in mind, if they don't go for QE3, then it effectively is sort of like an interest rate hike because it is a tightening of some form of monetary policy. So, there's different ways of handling it, there's different ways of throwing the baby out with the bathwater, but nonetheless, the reality of it is that we are in this inflationary environment. We certainly are in a hiking cycle. In South Africa, we're in the same boat, and I think that what you're basically seeing right now is that the fallout or the concerns around the United States far exceed that we're seeing anywhere else, and that's why people are saying sell dollars, and wear diamonds.
So, okay, wear diamonds, yes, definitely. What about the rand? Would you be wearing the rand? What are you doing with the rand play right now?
The rand at the moment is, like I said to you, it's carrying, it sort of remains within those ranges, quite well contained. We're seeing good exporter interest up at 680, giving it a good resistance level at that level. So I think for now we remain within that 680, 660 sort of range. I still think that we're potentially going to see rand come back again, trade back towards that 660 level. Opportunity to sell some dollars out if you see a pop above 680. But once we trade above sort of 685, then it does open up that 710 once again.
Fantastic.
So for now, those are the technical levels.